Welcome back to the GMS Weekly Ship Recycling Market Insight Podcast. It's week 51 of 2025. I'm Ingrid.
And I'm Henning. And yes, it's that week. December decided to remind everyone what volatility looks like.
Absolutely. In the span of just 2 weeks, we've seen a real tug of war. Freight keeps easing, the US dollar can't seem to pick a direction, oil is up a touch, but still sitting comfortably low, and steel plate prices are slipping in places that usually hold steadier.
And Turkey's basically watching all this from the sidelines again. Not because they want to, but because restrictions and weak currency momentum have kept Aliaga in observer mode.
Let's start with the wider mood. Inflation figures in the US were back in the conversation, and the headline takeaway in the report was mixed signals. Meanwhile, the Baltic Dry Index dipped again overall. And that matters because softer freight is often the early hint that more candidates could start appearing, but not immediately.
Right. It's not a switch you flip. Freight comes off, owners wait, then reality hits at the next survey or the next repair bill, and that's when recycling supply can finally loosen.
Oil did its own small move, up slightly on the week, but it's still sitting at a level that's globally comfortable. In the report, it closed just under $57 a barrel. That lowish oil price tends to cool overall inflation pressure. But in our space, it also contributes to the wait-and-see mood, because it's one more sign that the cycle may be turning.
And then we get to the real storyline underneath all of this. 2025 has been a landmark year operationally. The Hong Kong Convention finally came into force in late June, and it forced a massive shift in how yards prepare, how authorities process, and how buyers think.
That part is easy to miss when everyone's staring at price numbers. But the upgrades were the big work of the year. And honestly, the shortage of supply may have come at the right time because it gave yards the breathing room to get compliant and get operational under a new global standard.
And now, the forward-looking angle. The report points out something we're all seeing. Average trading ages are creeping up. Older ships are still out there trading, and as new build deliveries accelerate, there's a real chance that 2026 brings more recycling candidates back into the pipeline.
Okay, let's go destination by destination, because the regional tone is very different this week.
Starting with Bangladesh.
Bangladesh had a wild year feel in this write-up. On the one hand, the progress on Hong Kong Convention readiness is real. 22 yards now accredited by international bodies, and a couple more still in the works.
But on the other hand, the fundamentals have been sliding for most of the year. And the biggest pressure point this week was domestic steel plate pricing. It dropped sharply over just a few days, landing around the mid-480s per ton.
And when local steel drops fast, recyclers immediately protect their margin. It translates into lower offers, slower negotiations, and more soft sentiment, even if demand exists in theory.
Currency didn't help either. The US dollar strengthened a bit and pulled the taka back up again. And that matters because it tightens import cost dynamics and chips away at confidence.
Operationally, you can see busy but cautious in the port position too. Chattogram has multiple arrivals listed, and total tonnage sitting there is meaningful. That tells you yards have some inventory coming in, so urgency to chase the next deal is lower.
Which brings us neatly to India.
India's section is blunt. The report basically crowns India as having the harshest decline cycle of the year, not just in prices, but in the sheer number of compounding headwinds.
And it's striking because Alang still handled a lot of tonnage overall this year, including Hong Kong Convention units. Yet pricing power has been weak. The report notes that levels dipped below the 400 mark for many units at different times, and that competitive ships ended up going elsewhere.
This week's fundamentals were a bit more mixed, though, and that's important. The rupee actually strengthened on the week, moving back into the high 80s to the dollar. A stronger rupee can give recyclers breathing room and makes it easier to hold offers steady.
Plus, local steel plate prices in India moved up over the week, which is a morale booster. Even a modest firming can shift buyer behavior from defend to consider.
And there's also that pipeline point again. The Alang port position shows multiple tankers either delivered or recently arrived. That suggests recyclers have some work lined up. Enough to stay busy, but not so much that they're completely full.
Now Pakistan?
Pakistan's tone is interesting this week. Only way is up, but with a big asterisk.
The positive headline is real. The report highlights that the first yard gained Hong Kong Convention certification last month, and more are expected to follow in the first quarter of next year. That's a meaningful shift for Gadani's credibility in the post-convention era.
but the operational bottleneck remains: approvals and delivery delays. The report mentions a vessel sitting idle at anchorage for nearly 3 weeks. And those kinds of delays spook owners and cash buyers, because time risk becomes price risk.
Fundamentals did offer Pakistan some support. Steel plate prices were the strongest among the subcontinent destinations this week, and the currency stayed relatively stable. That combination is why Pakistan remains competitive on paper.
And yet, the port position also shows how thin the flow is. Gadani has essentially one small unit listed. That tells you supply is still constrained, and buyers are selective.
And finally, Turkey.
Turkey is basically the quiet corner again. The report describes Aliaga as on a forced holiday, with restrictions and the ongoing currency slide keeping activity muted.
The lira weakened again, and that's the frustrating part. In theory, a weaker currency can help export competitiveness. But if yards can't freely operate and there's no tonnage flow, it doesn't translate into market share.
There was one brighter macro note: inflation eased in Turkey compared to the prior month, which could help recyclers manage costs a bit better over winter. But it's still a watch-and-wait story until operational conditions improve.
Okay, let's pull it together with the indicative market levels and what they mean, rather than just reading them out.
Bangladesh leads the table again, but with weak sentiment, indicative levels are around 410 for dry, 430 for tankers, and 440 for containers.
Pakistan follows closely at about 400, 420, and 430. Also weak sentiment, but supported by domestic steel.
India sits behind at roughly 380 for dry, 400 for tankers, and 410 for containers. Still soft, but with a hint of improved momentum from currency and steel.
And Turkey rounds out at around 270, 280, and 290. Steady, but quiet.
Now, before we wrap, we want to add a quick note from the GMS side.
GMS is proud to share that our founder and CEO, Dr. Anil Sharma, has been recognized in Lloyd's List Top 100 Most Influential People in Shipping for the 16th consecutive year.
Lloyd's List noted that Dr. Sharma has emerged as a central figure in the global effort to raise standards in ship recycling.
And under his leadership, GMS has completed more than 5,000 transactions and handles about 1/3 of global tonnage delivered for recycling each year.
A huge congratulations to Dr. Sharma, and a big thank you to all our clients and partners who are part of that journey.
And with the holidays right around the corner,
we'd like to wish you and your families a warm season's greeting and a safe, peaceful, and prosperous year ahead.
Thanks for listening. We'll be back next week with the next market update.